Hello, viewers. Welcome to BQ Prime. This is Rishabh Bhatnagar, and you're watching Startup Street. Today, we have with us Chaitanya Ramalingegowda. He is the co-founder of Wakefit. Welcome, Chaitanya. Welcome to BQ Prime.
Thanks for having me, Rishabh.
So, viewers, most of you would know Wakefit started off as primarily a sleep solutions company. They started off selling mattresses, but have now expanded to all sorts of home decor items, furniture. More interestingly, they posted about 825 crore rupees in revenues for FY23. That's a very large number. And what's also very interesting is that they're not a listed company, so all their disclosures are voluntary. Chaitanya, why are we seeing more and more unlisted companies come forward with these disclosures? Is it to inculcate a discipline of being a listed company ahead of an IPO? Or what are the reasons behind this?
Frankly, this has been the experience that we've had over the last 4 to 5 years, Rishabh, that once the unaudited financials are closed around March 31st of every year, we try and reach out to the media to share our view of the story. This does two things. Number one, this enables us to tell the story of what happened last year, but more importantly, brings the discipline of books closure, closing all the costs, identifying all the levers for margins. This enables us to behave in a much more disciplined manner, whether we choose to list or not, and when the timeline is immaterial. But last 4 or 5 years, we've done this steadily every year, and this has helped us as a company.
Right. Chaitanya, the 825 crore number, that's a 30% year-on-year rise. Could you break that down for us revenue stream-wise?
Yes, we were last financial year, we were 636 crores, so that's nearly a 30% growth. But more importantly for us, the growth has come on own channels. That is a thing that we are happy about. What I mean by that is that our own D2C website, as well as our own stores, have contributed to a larger share than last year. And secondly, among the categories, mattress and accessories, which have been our mainstay from the last 7.5, 8 years, they have continued to remain EBITDA positive, while the newer furniture categories, which were barely launched about 18, 24 months ago, they're getting their way to profitability in this quarter or the next quarter. But we're working hard to get there soon.
Right. You're also aiming to get to profitability and 1,100 crore plus revenue in the next FY. What are your plans to get to A, profitability, and B, the revenue target?
Actually, nothing much glamorous. It's just to put our heads down and execute on the plans that we've already agreed upon with the board, which means continue to expand on our omni-channel presence, continue to invest in our brand building activities, and lot more to do on supply chain for furniture.
Okay.
If you notice, a lot of supply chain for furniture is in the same place where cold storage supply chain used to be a few years ago.
Okay.
Because this is a heavy and bulky item. This can get scratched every time you load and unload it. And the trucks and the staff are not really geared to deliver and install it. So Wakefit is creating this whole ecosystem in the cities that we are present in, which means the right trucking ecosystem, the right supply chain, and the right carpenter ecosystem to be able to deliver and install to our customers.
Right. Very interesting. You spoke about opening your own stores. Do you see the omni-channel strategy working really well for you?
Yes, you're absolutely right. We had this hypothesis for a long time that for a category like ours, we should see a very good traction offline. But
Right.
we, being a very conservative and frugal company, we wanted to experiment with all growth levers online before we went offline. So we had to convince ourselves that this retail form factor of this size, of this format, is going to be able to deliver the payback period that we wanted. Secondly, as we've gone deeper into furniture, our ability to create a store at a low cost point has also increased, because ultimately store is nothing but the same wood, lighting, and cabling, right? So as we've become more and more of a manufacturer and have depth in that ecosystem, we have been able to create stores at a much lower cost point. So that is a two-edged growth lever, which means our costs are lower, payback period is faster, because the revenue there is much, much higher than the online revenue per customer. So that has been, touch wood, a very good signal. And it's our omnichannel journey is just about a year old. So that is something that we'll double down upon over the coming 12 months.
So what's the number of stores that you're looking at this FY?
Last FY, we ended at 22 stores. And please note, all of them came up in the last FY itself. This year, by the end of FY24, I think we'll be somewhere around 80 stores.
Okay, got it. Chaitanya, is there also premiumization at play? Do you see that as a growth lever for Wakefit?
We have never said no to any particular segment, Rishabh.
Right.
What I mean by that is we started off by being very specific and very laser focused on the online consumer, where we said they are paying an inordinate amount of money for a product just because of the channel commissions. So it's very, very inappropriate for them to be bearing that cost. Ankit and I are both middle class people, and we've grown up in that ecosystem, and we know what kind of sacrifices a household makes to buy new products for their home. So that was the original dream. But today, as we've expanded, we've realized that the market is everywhere. There's a market at 6,000 rupees and there's a market at 40,000 rupees. But given that we have our own factory and we own the full stack all the way from R&D all the way to shipping, we are able to create products in the same factory with different materials and different grade of fabrics and so forth to be able to cater to the whole spectrum. My co-founder Ankit, is brilliant with this whole R&D all the way to ensuring that the supply happens to consumers, while the demand is also fairly strong for us.
Right. You spoke about having your own factories. That has sort of paid off for you in terms of what you just said, that you have the full supply chain under your control. Would you be looking at more factories or any sort of more capex that you would be doing in the next FY?
This FY, most probably not, because we have steadily invested and built a world-class, state-of-the-art, cutting-edge furniture factory. It is India's largest furniture factory. Similarly, we operate two mattress factories and accessories factory also. So given that we've already invested in the capacity that needs us to go to nearly 1,500 crore, we will not be putting in any more capex, at least for this year. We'll have to see how the capacity utilization goes and then take a call.
So since there is not going to be much in terms of capex, so not a lot of expenses coming in, could we expect a consolidated profitability across?
Yes, that's the dream for this financial year.
For this.
Yes. The idea is we have always been a frugal company where we've either been profitable and paid taxes, or we have been very close to break even throughout our 7.5 years of existence. So this year we hope to again mark our entry back into being profitable after a 2-year gap.
Right. Lastly, Chaitanya, what are your markers for an IPO? I mean, internally or even externally, what are your tick boxes that should be ticked whenever it is that you head for an IPO?
I wouldn't even venture down that path, Rishabh. I think it's too early to comment. Okay. The only 2-3 things that we always take care, whether we are a private company or going on the path of public listing, is number one, can we have the financial discipline to be able to close books, control costs, have very, very transparent view of the business as co-founders. That is number one. Number two, can we be predictable in terms of giving the guidance to our board and hitting those guidance every quarter and every year? And number three, are we able to meet all of the ESG norms that globally are prevalent, because we don't want to be a company that is just maximizing profitability. We love our employees. We love the work that all of the hundreds of vendors do with us. So that is an ecosystem that we cannot take for granted. It's not just Wakefit. It's not just 2 founders. It's not just 1,500 employees. It's a whole ecosystem. So can we do something for the communities on an ongoing basis? This is the third thing that we continuously keep an eye on. We'll see where things go.
Right. Just one last question. Is there any sort of fundraise on the horizon for Wakefit?
We have been very frugal in these last 4 rounds over 8 years. We have barely raised $100 million. And the last of those raises was just about 2-3 months ago, where we raised about $40 million. So given that, I think we are fairly sorted. And like I said, we burn very, very little, a few lakhs a month. So we are very, very careful in that direction. So until there is a specific need, we may not look at a fundraise for the next 12 to 18 months.
Right. All right. Thank you, Chaitanya. Thanks for your time, viewers. That was Chaitanya Ramalingegowda of Wakefit. Thank you for watching.
Thanks for having me.